All right, investors, what if 5 simple fund choices could quietly build you hundreds of thousands of dollars over the next decade? We're talking about Fidelity index funds that are perfectly positioned for 2026 and beyond. But here's what almost nobody tells you. Most investors pick the wrong ones and leave massive compounding potential completely on the table. If this is your first time here, welcome, my friends. This channel is dedicated to helping everyday investors build real, lasting wealth through smart, straightforward strategies. If that sounds like your kind of place, hit that subscribe button right now and tap the notification bell so you never miss a single video we drop. Let's set the stage, because 2026 is not a normal investing year. Markets are shifting, interest rates are recalibrating, and the investors who position themselves correctly right now with the right low-cost, diversified index funds are the ones who will look back years from now and say that was the moment everything changed. The enemy here is not volatility. It's not even inflation. The real silent predator destroying everyday investor returns is this: picking expensive, underperforming funds when ultra-efficient alternatives exist right inside Fidelity's own lineup. Think about that. You're working hard, investing consistently, doing everything right, and still a chunk of your compounding potential is being quietly drained every single year by unnecessary fees and misallocated exposure. That's your wealth leaking out. Here's the good news, my friends. Fidelity, the financial giant with over $12 trillion in assets under management, offers some of the most powerful, cost-efficient index funds on the planet. And today we are unlocking the 5 absolute best ones for 2026 and beyond. Not just good funds, the best-positioned, lowest-cost, most strategically sound options in Fidelity's entire catalog. These 5 funds could genuinely mean the difference between retiring comfortably at 60 versus grinding away another 5-10 years past that. That's not a small thing. That's your life. So let's dive into this together, because you deserve to invest with precision. ETF number 1, the Fidelity Zero Total Market Index Fund, ticker FZRO. Now, the word zero is doing serious heavy lifting here, my friends. This fund carries a 0% expense ratio. Zero! That means Fidelity charges you absolutely nothing to hold it. Think of your investment portfolio like a garden. Every expense ratio is a tax on your harvest, a percentage of your fruit taken before you even get to eat. FZROZ eliminates that entirely. It tracks the total U.S. stock market, large, mid, and small cap companies, giving you exposure to over 2,500 American stocks in one single holding. For a long-term investor, this is not just efficient, it is foundational. FZROZ is the bedrock upon which you build everything else. ETF number 2, the Fidelity Zero International Index Fund, ticker FZILX. Here's a truth most domestic-focused investors overlook. Roughly 55% of global stock market value exists outside the United States. Not investing internationally means you are voluntarily ignoring more than half of the world's publicly traded wealth. FZILX gives you exposure to developed international markets across Europe, Asia, and beyond, again at a 0% expense ratio. It's not just about diversification for the sake of it. It's about positioning yourself to capture growth when international markets outperform U.S. markets, which history shows they absolutely do in cycles. Pair FZROZ with FZILX, and you have effectively built yourself a globally diversified, zero-cost investment foundation. Powerful, simple, strategic. Now, let's pause right here, because I want to re-anchor something important before we continue. The reason most investors fall short is not lack of effort, it's lack of structure. They pick funds randomly, chase performance, and pay fees that silently drain their compounding engine year after year. We are breaking that pattern today. If this video is delivering real value, do us a quick favor. Hit that like button right now. It costs you absolutely nothing, and it helps this content reach more investors who genuinely need it. Now back to the list. ETF number 3, Fidelity 500 Index Fund, ticker FXAIX. This is the legendary one, my friends, Fidelity's version of the S&P 500, an expense ratio of just 0.015%, practically invisible, tracking 500 of America's largest and most powerful companies. FXAIX has historically delivered average annual returns of around 10% over long periods, and that 10% compounded over 20 or 30 years is the mathematical engine of generational wealth. Put $10,000 into FXAIX today, and in 30 years at historical averages, that single investment could grow to nearly $170,000. Not just a number, that's a paid-off car, a college fund, a down payment, a lifeline. The S&P 500 is not glamorous, it's not exciting, but it is relentlessly, quietly powerful, like a river carving through rock, not fast, not dramatic, but absolutely unstoppable over time. ETF number 4, Fidelity Extended Market Index Fund, ticker FSMAX. Here is where things genuinely get interesting, my friends. While FXAIX covers the top 500 companies, FSMAX covers everything else, the mid-cap and small-cap companies that aren't yet in the S&P 500 but are growing fast. Think of it like this. FXAIX is the established generals of the stock market battlefield. FSMAX is the elite special forces, smaller, faster, and historically capable of explosive growth. Small-cap stocks have historically outperformed large-cap stocks over long time horizons by a meaningful margin. Combining FXAIX with FSMAX essentially replicates the total U.S. stock market with ultra-low costs. This pairing strategy is not just smart, it's what sophisticated investors quietly use. ETF number 5, and this one is especially critical for 2026 and beyond, Fidelity U.S. Bond Index Fund, ticker FXNAX. Now, before you scroll past because bonds sound boring, hear me out. Bonds are not boring. Bonds are armor. With interest rates having shifted dramatically over the past few years, bond yields in 2026 are far more attractive than they were in the era of near-zero rates. FXNAX tracks the Bloomberg U.S. Aggregate Bond Index with an expense ratio of just 0.025%, practically free. It provides stability, income, and a critical counterbalance when equity markets experience turbulence. A portfolio without bonds is a ship without ballast, fast but dangerously unstable in rough waters. Your allocation to FXNAX depends on your age and risk tolerance, but ignoring bonds entirely in 2026 is a mistake you cannot afford. So, let's bring it all together, my friends. 5 Fidelity Index Funds, FZROZ for total U.S. market at zero cost, FZILX for global diversification at zero cost, FXAIX for S&P 500 precision at near zero cost, FSMAX for mid-cap and small-cap growth exposure, and FXNAX for bond stability and income. This is not just a list, it is a complete, balanced, battle-tested investment framework built entirely within one platform at some of the lowest costs anywhere in the industry. The investors who build this foundation in 2026 and hold with discipline for the next 10, 20, 30 years, they are the ones rewriting their financial futures. If this video helped you today, share it with one person in your life who needs a smarter investing strategy going into 2026. That single share could genuinely change someone's financial trajectory. Like this video, subscribe if you haven't already, and hit that notification bell so you're first to know when we drop the next one. Let's build this wealth together. See you in the next one.